Hello and welcome to another update video about oil. We take a look at WTI today. Wanted to start with the longer time frame here, the 4-day chart, and you can see that we obviously saw that long-term decline. Okay, oil was in a long-term downtrend into the April-March 2020 lows. And then obviously we had this huge rally to basically, not new all-time highs, but it rallied significantly. And obviously in this period here that we're looking at in this chart, it definitely reached resistances. And this is considered currently an A-wave rally. Okay, so it was a local top. You might want to call that a wave 1, yeah, but to be honest, it doesn't really make a great difference if we call that an A wave and a B wave pullback or a 1-2. With an ABC, at least we are more on the side of caution. And to be honest, a third wave would take us to moon targets. I mean, just to give you an example, where would a third wave take us? And even if we go a little bit lower still, I mean, just to give you a rough idea, third wave should take us to like ridiculous, like 2000 something. Whereas we are not that, crazy with a C wave, but even a C wave can take us higher significantly. It is long term and it will take a while to play out. At the moment, the idea is that we are ranging. We are in a B wave. Yeah, so here this B wave actually. We topped in an A wave. The move down is now a B wave pullback. It's possible that the B wave already bottomed here in May 2023 when the price bottomed locally around $65, 64, 65. However, that pullback was quite shallow. So its preferred interpretation is that this was not all of wave B, but just the A wave of a larger B wave. Then now we're basically looking at the B wave of the larger B wave. And then we should still see a C wave of the larger B wave. That could take us maybe, I don't know, depends a little bit on how high the B wave goes, right? Then we can calculate a target for the C wave. But based on what we see here, maybe sort of mid 40, low $50 range. Before then, a substantial rally should happen in the C wave. Now let's look at the shorter time frame. Let's go here to the daily chart. Yeah, idea is, and that's pretty much unchanged from previous updates. It's just that in previous updates, I think I looked at the crude chart, the light crude, no, not light crude. We looked at the Brent, and this is obviously WTI. And on this chart, what we see is that the initial rally from that May 23 low to the upside, you could count that as 5 waves, but it looks more like 3. So we had this A wave rally, then we saw the B wave pullback. It did turn at the time where it needed to. It was a little bit low, but it did turn where it needed to. But that, the fact that it came down so low and very close to the May lows of 2023 rather indicates it's a B wave pullback, because these can be deep. A wave 2 technically can be deep as well, but more often it's the B wave then. And then a C wave rally would now take us higher. Based on the data we have, we can actually calculate a rough target area for that C wave. And it would be between the 100% extension and the 161.8 extension. However, I have to say it will depend also on the microstructures and how they are developing. So looking at this here, we have an A wave up, a B wave down, and the C wave rally. And the C wave would be a 1-2. Okay, and this is what we're looking for in the last video, this wave 2 pullback. And it actually landed in the support region. Here the 50% Fibonacci retracement was touched. So it could be done, this wave 2. And the idea would be, the way this goes is that the wave 1 is a corrective rally. So we're dealing with probably a wave 1 in an ending diagonal, so that this C wave is an ending diagonal. And then we might want to add here some kind of a trend channel or something. It's not very reliable, but there might be, the price might follow a channel. That's what diagonals like to do. We'll see how that all comes together. If this is now a third wave rally that starts, then we can, based on the data we have, and it's not confirmed yet that the wave 2 is over, but if we break above the last swing high, at around $84, $85, then this would be, yeah, we would get some additional confirmation that the wave 2 has bottomed. Now, if we measure now a target for a third wave, it actually should already take us above $100. Okay, so I'd be looking at a minimum of 106 actually. And then we should get a 4 and a 5 that could take us to 117. Good confluence with the larger degree C wave target, I have to say. So that's sort of what I'm watching. And below $71.91, the idea of an overall bullish WTI count here in the medium term will get challenged, because that, again, that would be too deep for a wave 2. So I mean, ideally the wave 2 is already in. The 50% fib level is fine. Can still use the entire yellow box if it needs to. That's my update about oil. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, then feel free to check out our stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.